What's up, outliers? Great to see everybody back. It is Friday. Market was closed today, so obviously, really nothing done, but a little bit of homework. So I've been going through a lot of both what I'm doing and then also some ideas for the channel. And I actually want to discuss those with you all, specifically on the beginner series, because I'm looking at launching a new mini series specifically for the Friday stream. And as you know, a few times throughout the year, I normally do like an options trading basics course that's normally like anywhere from like 8 to 12 weeks. It's every Friday. I'm not ready to re-kick one of those because we just went through one and it takes a little time for me to kind of build material and then decide if I'm going to do like another repeat of the actual 101 series, meaning the absolute basics, versus doing like a builder on the last series, because that's what we did for the last one. It was kind of like a 101 plus. I'm imagining for the next one we'll probably do like a straight 101 again. However, for the next 4 weeks or so, I haven't fully defined it yet, and I actually want to spend time during the stream today with you talking about this to figure out exactly what we want to do and how we want to frame it. But what I want to do is offer a outlier options trading foundations series. Now, the vision I have behind this, there was actually a conversation going on in the Discord with one of our regulars, Ben, and we're talking about this idea of different levels of learning with respect to options trading. And one of my underlying themes that I've identified over doing this for kind of a long time now, realistically, not just me trading. We all know I've been trading for almost 2 decades, but actually doing content creation and trying to show other people how to approach trading. And one of the things that I've absolutely learned is that teaching the actual elements of trading options, realistically, it genuinely is not difficult. It's just like learning any other general skill set. That part really isn't challenging. I think the most challenging aspect to a new options trader to be able to pick up trading options is the ability to teach yourself how to learn and also to understand what to focus on. And what I mean by that is if you'll pay attention to any of the prior, trading basic series that we've done that really are focused around options, very frequently the very first few items we'll always talk about, not options. I don't even mention the word options. And it's because having the right mindset and understanding of the world that you're entering into is so much more important than understanding if a 30 delta is going to be more profitable than a 32 delta, right? Like those trivial details do matter. And in the long run, they absolutely will be usable to whatever strategy you're running. But unless you enter that world with the right broad mindset and approach, it doesn't matter if you're looking at a 30 delta or a 32 delta. It really doesn't matter at that point, because everything else is not in order. So that's the broad goal for this foundations series. Now, I'm actually working to outline those topics, and I want to spend time maybe towards the tail half of the next 15 minutes or something talking about that with you, conversation style. But before we get into that side of things, I actually would love to just connect with you all to understand what's going on in your world as a trader. How are things going? How are you finding the markets right now? Are there things that you're struggling to understand what's going on? Are you finding it easy or difficult to create trade ideas? And I'm asking this question for a few different reasons. One, because it's actually going to help me understand and shape the mini series a little bit. But then 2, we really haven't had a chance to connect for a couple weeks. So if there's anything that's top of mind for you, now is actually a really great time to discuss and see what we can uncover. So great to be back. Looking forward to chatting with everybody. Looks like we got Reese, Tommy, H, Lauren, Pascal, trading your options. Hopefully you're trading your options, not trading your options. Otherwise, tough business. Trading Options says, wondering when to get out of a vertical spread. Simple question, but this goes actually back to literally what I was just talking about, how important it is to have the fundamentals down. So the brief answer to that question is when to get out of a vertical spread actually has nothing to do with it being a vertical spread, a horizontal spread. It doesn't matter what the spread is. It has everything to do with what the strategy is. So the way that you answer that question, trading your options, is honestly not worrying about vertical spread at all. That's ancillary details that will be added on to what you're doing later. What needs to be defined first in that scenario is what's the strategy? And based on that strategy, then what makes sense to close your position out. So we could take a look at a couple examples of something like that to see if we can help dial this in. But I'll show you this right here. This is from just this random deck that I've made that I use like a reference for us. But this is what I call the outlier trade process. There's two main process docs that I continually reference and put in front of you. There is the outlier strategy process, and then there's the outlier trade process. The strategy process is exactly what it sounds like. It focuses on strategy level and development of actual option strategies or just trading strategies. The trade process is the execution of a specific strategy. So what you're talking about now in terms of your question, trading your options, is actually down here. You're in step 3 of the outlier trade process. Now you'll notice that you're effectively in the execute trade stage. And in that execution, the question is, well, where do we exit this vertical option? The way to think about answering these questions is you have to put first things first. And first things in this scenario stem from what is the strategy that you're trying to trade? And I'll give you a couple examples. Let's say that I'm looking at the broad market right now, and we're in SPX. So we'll look at SPX. And let's say that I have a vertical spread in SPX. And as you may or may not know, we can be long or short vertical spreads. So in this context, let's say that I'm long a vertical spread. And the entire premise of my long vertical spread is directional. My basis, the profit mechanism, the basis for the trade is a directional assumption of some sort. So let's say I think SPX, just using a random example, SPX is going to go down. Let's say I think that. And therefore, I decide to buy a put spread. Well, if I buy that put spread and SPX starts going up, I'm wrong. So depending on where, based on my strategy and my approach, I would be fully disproven. I would be fully shown that I'm wrong, meaning you have to give the trade a little bit of room. This comes from the strategy element of this phase, because your question will open up other questions as you start to solve your original question. So again, back to the original question, when do you close a vertical spread? Well, we have a bunch of questions we have to ask. The main one is, what's the strategy? Is it long or short? So if we go back to the outlier strategy process here, you'll notice that we have to go through two key stages: defining the profit mechanism. In this case, we're talking the profit mechanism's directional. And then we're talking about the behavior of the profit mechanism. So this one can effectively be summed up to behavior. So looking within the behavior of the profit mechanism, I'll tack this on so that it's clear. When we're looking within the behavior of a profit mechanism, not all directional trading is built the same. So what that means is, going back to this basic idea, if I think SPX is going to go down, price can go down in different ways. Here's an example. This range here to here. Take a look at what price did from here to here. Price went down really aggressively, 3 days consecutively. That's a different movement pattern then something like from here to here. Price also went down here over also 3 days, but much less so. So it's not built the same. So that means that the way that I'm going to trade these two different scenarios might be different. So one of the beautiful things about vertical spreads is very frequently you just kind of leave them on. Now, you do have to be worried about early assignment of one of your legs, specifically the short leg, or assignment if it expires in the money. So to parameterize the condition, easiest place to start is, well, we know we're going to close it before expiration. We know that because unless you're trading an index option that settles to cash, there is assignment risk and you might not want to carry that inventory. Okay, so that gives us a starting point. We know that it's going to be before expiration. So then the question is, when before expiration? And then that goes back to what the strategy is. If we're trading some sort of, let's say, for example, instead of trading this via a long put spread, I choose instead a short call spread. Well, if it goes against me, I kind of expect that to happen. That's the nature with short options and short spreads in this context. I'm essentially, again, based on the approach, I'm either going to define my max loss on entry via the sizing and the width of the spreads, or if I'm trading the vertical spread for leverage, that's a different scenario. So you understand my point here, hopefully, that it really, anybody that gives you a blanket answer to that question is straight up bullshitting you, because it doesn't make sense. There isn't a blanket answer to that question beyond something like before expiration. And even that's not a blanket answer, because again, if you're trading index options, or for example, if I'm trading 0 DTEs or 1, 3, 4 DTEs and SPX, there's very frequently that I'll have a vertical component leg to that as of lately, and I'll let it go into expiration. So even that isn't really a blanket answer that's fully applicable all the time. It's highly nuanced depending on what you're doing. So that's really where you have to answer that. You have to start by defining what you're doing and working backwards from there. Because again, another scenario for me often is if I'm using a vertical spread, I personally am going to use the width of the strikes and the size to serve as my risk management. That's how I'm managing the risk in the trade. So, and it's because multi-leg strategies, I don't want to move them that much. I don't want to have to enter, exit, enter again. It's a lot of legs. You're going to get a lot of slippage and it builds up fees really fast. So instead, I will essentially fire and forget. And then if I am trading some sort of vertical spread in an individual name, again, going back to what we do know, it's going to have to be closed before expiration, or if there's early assignment risk. It's not a big deal if you get assigned with the legs, but it's just an annoyance. It does become a little more confusing / complex if it is something that expires in the money. So if you're trading it that way, where you're using the vertical to define the risk and size, then your management approach is going to look way different than if you're using it as simply a way to manage the margin requirement. If you have a smaller account, what that means is you might sell a 30 delta call, but rather than buying something that's a little further out of the money, maybe like a 25 delta or something like that, you're going to buy like a really cheap wing that's like a 10 delta or a 5 delta, where that's not really designed to be a risk management element of that trade. That's more designed just to cap the margin requirement for smaller accounts. So a lot of nuance. As always, this is the fun part, in my opinion, with options, is that there are very few simple basic answers, even to seemingly very simple questions like that. But I hope that gives you at least some ideas to start with. You really have to take a look at the strategy. And once you define what you're doing with the strategy and how the vertical spreads allow you to capture the profit mechanism and the behavior of that profit mechanism, then you can come up with some logical ideas based on what might make sense in terms of your exits. Reese says, I'm sitting more cash than I ever had shorts that I closed, waiting for clarity, trying not to force trades, but doing nothing is hard. Yeah, that honestly becomes a little bit of a disease, to be honest, because moving to cash is fine if there's a good reason, but there's a lot of instances where, especially if you're an options trader, there really are kind of few instances where moving to cash and staying in cash, I think, is like actually fully applicable or logical. And it's because if you're a well-rounded options trader, there's kind of almost always something you can do. And if you're finding that you're not able to find things to do that you like, well, that's obviously giving you a glaring pointing sign that there's some massive holes in the game that we need to round out. So I totally understand that sentiment. That's probably the case for a lot of people. One of the things that I think options traders get caught up in, like these general advice pieces that you'll hear from other types of trading, is like, oh, like cash is a position too, you can move to cash. Again, that's really, you can, but for options trading, that's really not highly applicable. A lot of the times you'll hear that will come from stock traders that trade from the long side only. For them, it makes entire sense to move to cash, to sit in cash, and to do nothing if their entire modality of trading is based on something like a CanSlim method, where you're playing growth stocks to the upside. That's a really challenging environment right now. It might make sense for a lot of those people to sit in cash. And that's one of the artifacts of a stock trader's return profile. This is a really important concept to understand as a trader, with like what we're doing as options traders compared to what other traders do as stock traders, CanSlim traders, whatever other, trading approach you want to highlight. Because if we take a time series like this, and let's say that this is a 10-year time series, and let's say that this is year 0, and we just add, a couple notches in here. We'll do one more here. And there are periods where a stock trader's returns, let's use green for a stock trader. Stock trader returns might, let me finish the axis here. This is percent return. So you might have a CanSlim style stock trader that might have a year that looks kind of like this, and then the second year looks like this, and then the next year is like this, and then a year after that it's like this, and so on and so forth, right? You just kind of normalize that out. What I'm showing you is with somebody like a CanSlim style trader, there are going to be conditions that are insanely profitable for that group. They can have literally thousands of percents return depending on how aggressive they are in these time frames, right? So we can take a look over the course of, this 4-year time frame, and we could say, yeah, wow, like they really crushed it here. This is a super solid return. However, they're also going to have periods where they either are going to go down quite a lot, or there might just be nothing to do. Their fastball might not apply, and it can look like this line here where there's just not much to it. Whereas the world of options trading is quite different. The world of options trading, in my opinion, and this is my approach as compared to other people's approach, is I'm actually way less concerned with having those kinds of peaks, but my performance in the aggregate looks a lot more like this, where it may or may not pace at the end if this is aggregate total account performance, but there's less total volatility in the way that I seek to trade compared to what a CanSlim style trader might see. So the reason why all this matters is because when options traders hear things like, oh, cash is a position, you can sit in cash, you can sit in, do nothing. You can, it's a choice, but there's a downside to that choice, because while the CanSlim stock trader might have a year that gives them a 3,000% return, the probability of you seeing that as an options trader is super fucking low. So what that means is you need to be way more consistent in your return profile so that in the aggregate, it ultimately pans out. So it's something to be aware of. Cash is fine, but getting too comfortable being cash becomes really dangerous. And then also, again, if you're an options trader and you're looking at a market like right now, sitting in a lot of cash, you're like, man, I don't know what to do. That shows that we have some pretty serious gaps, because from an options trader lens, literally, this is a wet dream. It doesn't get much better than this, because from trading options, our entire lifeblood is volatility. It is volatility. And right now, you are actually seeing good volatility. This will not always be the case. This actually infrequently is the case. These are the years that options traders typically should be outperforming pretty handedly. And it's because this is the condition that's suitable for our world. Compared to something like a CanSlim style trader, this will be very difficult for their world. So yeah, just some general thoughts around it, I think. Let me see. Lauren says, I'm pulling out of trades too quick. I don't trust the market, paper hands. That goes back to just not having a defined plan. Realistically, if you have like a defined plan, defined strategy, and you already know how the thing is that you're trading, or the approach or the profit mechanism that you're trading typically behaves, then that question entirely goes away. The reason why you're doing that is not honestly because of paper hands. That's an artifact of not having a strategy built. The reason why you have paper hands is because there isn't a strategy that you trust with any level of clarity. So then you're way more incentivized to just go off script, because the entire thing is off script. It's very difficult to adhere to anything in that context. The reason why I mentioned it in that way is to help you with positive attribution. It's to actually identify the thing itself that needs work on. So the way you fix this thing that you're talking about, Lauren, is not by sitting there saying like, damn, you know, I have paper hands, I gotta be more resilient in holding my trades. That's not gonna fix it. What's gonna fix it is actually building a strategy and understanding the way that that thing behaves. Again, great example. If we go back to SPX, and let's say that we're trading short-term premium, again, 0, 1, 2, 3, 4, 5, whatever DTE time frame you want to use. But let's say that we're using sell-side strategies. We're selling premium. Well, if I am undisciplined in my approach in doing this, what you'll notice is, let's say, for example, that there's an entry here for a 0 DTE trade on this candle. And let's say that you have no context. You don't know what the market typically does. You don't know how SPX typically behaves. You don't know really anything about the strategy. You're just like, let me sell some short puts in here because I've heard that there's risk premiums on the put side, put skew, and I think that they're a little expensive here with all the down moves. Well, that trader, as the market collapses and the position seemingly just continues to move against them relentlessly with no change and just very one-directional against them, that trader at some point probably around here is going to be like, ah, shit, I should get out. I'm wrong. It's not going in this way. I thought it was going to go up, and it's just not, so I have to get out. Whereas if you're more adept in trading these things, then you might have a better understanding of the total range that it can have over the course of a day. And you can say, well, maybe actually I think it's a little too extended here to the downside. I might as well just wait at this point. And then in this looking back armchair quarterback scenario, it rallied back up and you would have been fine. But instead we exited at a loss. That happens literally all the time. And the reason why that happens so much is because you're playing human nature at that point, and you're playing into something that's completely unknown. So this person that doesn't have an understanding of how these things move is going to be the paper hand person that's going to exit down here because it looks terrible and this, that, and the other thing. Whereas the person that might study this a bit more and have an understanding of how this thing might move and has at least some details and data based on prior analysis of, let's call it intraday moves based on the entry time frame, you might say, yeah, okay, well, this strategy in general is going to win X% of the time. This might be one of the times that it doesn't win, but I size it in that context. And I also know that there's a really high frequency for reversals. So if I got out every single time in this kind of strategy when things looked bad and it was going against me, that means I lose out on those 15% of reversals, which is a really important part of the actual return profile of the strategy. So that's why it's really not a paper hands issue at all. It is entirely a strategy issue. Super common. H says, very weak on idea generation, came from the GME crew and have mostly been building the position, selling calls against it. Feels like I need to branch out, but also have been learning a lot overall. Yeah, I think, working into running the coverage triangle on it, just had a windfall come the other strat. Yeah, so the idea generation, that just comes from having a narrow toolbox. So like you're saying, if you're really just focusing on trading one stock, you're naturally going to run into that. So in your scenario, Senor or Senor SH, this is where you need to spend a little time looking at profit mechanism. And again, it's just a way to think about how things make money. So when I'm considering a profit mechanism, I'm thinking, how does this, whatever it is that I'm looking at, how does it functionally make money? So in GameStop, you could look at things like price direction, you could look at things like volatility, whatever you're so inclined. But then you can apply that same framework for whatever it is in GameStop that has you in there. If you're a standard GameStop trader that's more just kind of like on the hodl team, then you have to develop other profit mechanisms to apply in other things. But yeah, this is where you got to spend some time to come up with other trade ideas. Because right now, and I put this out in a recent newsletter, I've talked about this quite a lot, but right now there's literally a million things to do. You have trading downside direction. You have tons of short premium strategies. You have tons of volatility trading strategies, relative vol, index vol, cross index vol relationships. You have pairs trading. You have now earnings trading. Like, there are literally a million things to do right now in the market. And there typically are a lot of things you can do. That's the beautiful part when you build a more well-rounded out toolbox, is that you're not really restricted into doing like one thing. Because yeah, if you only trade one stock or you only trade one strategy, there are going to be periods where it's just disadvantageous for that, whatever that is, right? Just the example I gave you before with respect to CanSlim from a stock trading lens, or even the coverage strangle like you referenced. There are periods where the coverage strangle, like right now, I've talked about it with the leveraged ETFs that I'm trading the coverage strangle in. Like right now, the coverage strangle is not performing well. I think the overall return for it for the year, the last leg was like 2%, not doing well. But most of my return so far this year has come from all the speculative trading activities, because I have to rotate and do other things when that one thing isn't working. That's another mental disease that a lot of hobbyist level traders have, is a hobbyist level trader is way too concerned with their convenience or their preference. A hobbyist trader will say things like, well, I just want to run one strategy because it's simpler, or I just want to look at one stock because I don't have time to look at other stocks. You can do that. Like, it's entirely your choice. With trading, it is absolutely a build your own adventure. However, if you succumb to that, and if that is your choice, there are a ton of trade-offs that come with that. And there's going to be plenty of periods where whatever that thing is, or that specific stock is that you like to trade, is just not going to do well. And then you're just going to sit there and wait. And again, that's the trade-off you accept. You preferred simplicity and you preferred your ease. Just like when I was talking with Lauren before about the paper hands, we've talked with Lauren before about this and about the importance of building a strategy, but she's not done that. So right now she's prioritizing another series of elements, whatever they are, over the actual process of like sitting down and doing the hard work of building a strategy. So because of that, that's the trade-off, is we're avoiding that more difficult, challenging problem set. That's good in a way, it's easier for us. However, there's a trade-off, and the trade-off is that she's finding that she's exiting strategies too fast because of paper hands, because she's nervous with the market and she's not sure what to do, right? So every literal decision that we choose to make when we're approaching this whole thing of trading, it's going to come with a series of trade-offs. Again, that's the beauty of this whole thing. Hey, yo, James, what up? Good to see you. H says, also wondering what you use for back testing. Tasty has limited back testing software for options that I've been playing with. Yeah, I've talked about this quite a lot. So in short, I've built my own. And it's because I have never been able to find something that fully does everything that I would want it to do. Now, there are two solutions that are public facing. They're both paid. I'm an affiliate for two of them because in the world where I know a lot of retail traders are not going to build their own solution, I try to look for things that I think are decent otherwise, understanding that, right? And again, there's a trade-off there. The trade-off here is really you're saving money. It might sound weird to say that, but using a paid solution is actually cheaper than building your own because the data is really expensive to access. So for people that might be trying to make this trade-off analysis of like, do I want to try to build my own or do I want to use a paid solution? And you're thinking like, well, the paid solution is expensive. I can almost guarantee you it's going to be cheaper than building your own. It's expensive. It's the cost of doing business. Now, there's that element, but then there's also the skill set, right? It takes time to learn how to build your own thing. Now, what's the trade-off here? You get to use whatever the build solution is. And that means whatever the logic is that they use in building that, whatever the limitations are in terms of what timeframes they offer, what kind of overlays, how complex it can be built, all of that is now slaved to whatever that solution produces. Whereas if you build your own, again, it's a choose your own adventure. So everything that we do here is going to come down to a trade-off. So the two that you can check out that I do think are worth looking at, the first one is ORATS, and there's links to these in most of the recent videos that I've done. You'll see there's an affiliate link in there. I do get a kickback. It's honestly trivial, but you get a discount. That's the reason why I found them, is because I get asked that kind of a lot, and I wanted to find something that I at least feel good to recommend to people because, again, like I normally just use my own stuff. But ORATS is solid, and they also have an API infrastructure, so you can just pull data from them as well to then manipulate and tinker with on your own. They have their own series of issues, though. One of the issues I have with what ORATS does is they infer deltas. That's inaccurate. So there's, in general, it doesn't make that big of a difference. But again, for somebody like me that wants things precise, it's imprecise. It's a data management approach because storing full Greeks, full options chains for every single underlying for the last 20 years is like tremendously large data. So because of that, you can run some shortcuts. You can say, well, the delta of this call is 45 delta, so 1 minus that is the put. And it might not be, especially for things that are further out in time and more volatile. So that can impact what you're doing. So there's small artifacts like that that you just have to accept. There's a free solution through Thinkorswim, and that's cool. The problem with that free solution is there's no way in aggregate to run an idea. You have to click and move everything. So I like that actually for a slew of different reasons, but that's the trade-off for that. Another one is Options Omega. They're pretty solid. I like their data set. I looked through it actually pretty early on. The thing that is really restrictive about them is they're really focused on a specific series of trading, mostly short-term trading styles and indices. They don't offer a lot of names. So that's the trade-off for that. Then as soon as you want to start applying management, I want to get out at this option if it's at X% return, or if the underlying did this, good luck. You're going to run out of stuff insanely fast that can do anything like that. So one of the things to keep in mind is with back testing is I think one of the things you have to get comfortable with as a trader is using imperfect information and being comfortable with that. But you want to rough out ideas. So again, for example, if I'm trading SPX here to the downside, does it materially matter if I sell a 30 delta or a 33 delta call? Does it materially matter? To a degree, to be honest, because that can yield maybe a point difference in total performance. But what really matters is my ability to even have a shot at predicting direction. That matters so much more. So it doesn't matter if I'm spending too much time trying to optimize between the 30 delta versus 31 delta, or should I exit at 50% max profit, or should I exit at 55% max profit? None of that matters if everything else isn't in order, being your ability to identify a profit mechanism and signal. The beautiful part about that is it's easier to find. You don't need to run these super complex back tests to understand those things. So going back to the intraday example I gave you before in SPX, if I am trading long premium, short premium strategies for that time frame, it doesn't ultimately matter if I understand how it tends to move. That's what matters way more, because then it's going to inform the strategy that I use. So the summation for all of that is I personally use my own stuff, and it's because I treat this professionally, right? This is my livelihood. So that's a cost of doing business. And I've already talked about this before. I've talked about this years ago, where I literally have spent over 6 figures on just data, literally just market data. And it's a cost of doing business. However, for people that don't necessarily take it that seriously or to that degree, then you don't necessarily have to spend anywhere near that much. You can spend a lot less, but then again, there's trade-offs. Maybe you don't have minute level or intra-minute. Maybe you don't have full Greeks. Maybe you have a smaller suite of tickers that you're going to use, right? Like it's customizable. You don't have to spend a ton of money, but at scale, it's worth it. Now, if again, you're using more basic ideas and you want a cheaper solution, those are at least a couple you could take a look at and see what you find. The problem is any sort of free back testing solution is not going to be very good. I literally can guarantee you that. And it's because, again, the data is not cheap. Housing the data is not cheap. Building the actual tool to run the back tests is not easy, especially with all the logic that has to be done depending on how complex it's going to be. Then the maintenance of whatever the tool is that you build is not cheap. One of the problems retail traders have fallen into is that because you're used to hearing things like free access to trading platforms, having free access to an app, having free access to paper trading, having commission-free trading, like retail traders have been primed to think that this shit's free, and it's fucking not. The reason why all of that other stuff is provided to you for free is because the brokers make money off your order flow. That's why there's literally entities that are fucking competing for broker order flow, because they know retail traders are uninformed order flow and they can make a ton of money off of it. It's exactly why that happens. It's exactly why when you go to a brokerage place, they're like, sure, come to our completely free options trading boot camp. We'll teach you over the course of a weekend. This is great. And people are thinking, oh, wow, this is so amazing. The broker cares so much about me. They're going to teach me how to trade for free. The broker is literally monetizing you. That's what they're doing. And I'm not admonishing them for that, right? It's business. But I'm admonishing the naivete of retail traders in those instances and not being able to see what's actually going on. And again, that's not to say that you can't go to a broker-powered trading thing and not learn valuable stuff. You can. But you should go into it eyes wide open, understanding the landscape of what you're looking at. And this goes back to back testing. So if there's a free back testing tool, the free back testing tool is incentivized in some way to monetize you in some way. If it's a free back testing tool, it's going to have a ton of limitations, again, just because it's not cheap. In order to build a good one that's robust, that can do a lot of things, then you're going to go into the next tier, which is lower paid solutions. And for the average retail trader, the lower paid solutions are still relatively expensive. And that's just a reality of things. For a lot of these kinds of places, $100 a month, $200 a month. And for a regular retail trader, they're like, whoa, shit, that's really expensive. Again, in the grand scheme of things, it's really not. But retail traders have just been so primed that everything for them is super cheap and free. And it's just not reflective of the reality of the world that we live in. And when I say that, I don't mean like the broader world. I just mean in the trading world. So those ones that I did mention, though, they're not on the high end of the cost spectrum. But yeah, those are some of the details, at least about them. Check them out, see if they work for you. But yeah, it's definitely a little bit tricky to find something that works well. Let me see. Salad Sandwich says, do you foresee a giant GME bone cone? I haven't looked that close, to be honest. I haven't spent a lot of time getting reacquainted. I was planning on doing that tomorrow. But I mean, as of right now, there's nothing necessarily jumping out at me. But that's also a very ignorant statement at this point, just because I don't really know what's going on. I haven't really gone through it. So probably should have a little bit more on that tomorrow, I think. H says, do you care about / try to sculpt your Sharpe ratio? I don't really try to sculpt it. I mean, it's really important to be aware of what your risk adjusted returns are. And honestly, it's also funny because like Sharpe ratio really, I don't even think is like an optimal risk management or assessment thing. It's just something that institutions use, fund managers use. So then retail traders like, oh shit, I should use this one. I always find that comical. But yeah, I do think in a more broad sense, risk adjusted returns are super important. It's because it gives you the entire context of scalability. Is an idea scalable? And if you have something that has a really great compound annual growth rate, for example, but a really poor risk adjusted return, that might not be super scalable, even though it has a really sexy looking compound annual growth rate. And it's because there's a reality. When systems produce things, they can produce things that are purely optimized. This is like the same thing with Kelly sizing. If you use Kelly Criterion for trade sizing, Kelly Criterion does exactly what Kelly Criterion tells you it's going to do, which is optimize for growth. That comes at a tremendous cost, which is absolute fear for your fucking life because of what it's going to tell you to do at different times with respect to sizing. You're gonna be like, yo, I am not comfortable with that at all. And that's why they have things like half Kelly, quarter Kelly. They have smaller versions of it because of those kinds of things. So yeah, I think risk adjusted returns are really important, not in terms of if you could tell on the monthly readouts, for example, that I give you guys on my performance, I don't include risk adjusted return there because in that context, I really don't care. It doesn't matter to me. But in the context of what strategies I use, how I use them, and how I scale them, that absolutely matters to me a lot. And again, that gives me a lot of context on the scalability. So I got to pop the door for Thor real quick. It's time for him to go grab his dinner. Little dude is ready for his din. JG says, what helps you determine what delta you're choosing to sell your short calls, more specifically with the ratio diagonal? Great question. So for that one specifically, and for those that are curious what that strategy looks like, it's pretty simple in its shape. So let's take a look at something like Palantir. And let's say that we have a ratio call diagonal, purely hypothetically, wink, wink, in Palantir. And let's say in this hypothetical ratio call diagonal, we're out right now in the 16 Jans. And let's say that we have something that's fairly deep in the money. What is it? The 65s. So let me get rid of these other things in here. The 65. And let's say we start with a 25 lot here. So we have a 25 lot at the 65s. And let's say that we're selling short calls against them. And the question right now is what delta? So it starts always with what is the idea behind the trade, behind the individual positions. So in this case, if I'm trading something like Palantir that I think is still bullish in the longer term, but not necessarily given the current environment, hyper bullish, likely going to just slowly meander if it is able to sustain the up move, which I would broadly assume, again, over a long enough time frame, then I'm not so concerned about capping the upside. Now, again, this is in context. I never want a flat upside profit potential. So because of that, there's a series of choices I can make. And there's two things that go into the decision beyond what is the idea for the underlying. So the first step is what is the idea for the underlying. If I'm trading something that I think is going to move a lot, then I'm going to want something that's further out of the money and I'm going to want to size it down. Or if it's something that is going to move a lot, I might sell something that's slightly more aggressive if I'm seeing vol priced rich on the call side, but then I'll just size it down. So the first thing is, what is the idea for the underlying? The second thing is, what's the current position at? What do I want to do with it? A great example is this. Let's say instead of the long options right now being all the way out here in 16 Jan, and let's say that I put this position on a while ago, and let's say that the long options now were actually sitting at the 20 June. And let's say that they're super deep in the money because it's had a really strong rally. Let's say that hypothetically, of course, that we had something like at the 20s. And these were grabbed much, much cheaper than where they are now. I don't know exactly. Let's just call it like maybe 10, if that, something like that. Now, for the way that I run the ratio call diagonal, it's about time for these to come down. They need to go away because they need to be moved further out in time. They're coming in on the time window for management of the ratio call diagonal. Because of that, going back to the delta question on the short calls, well, I know that the longs need to come down. So what I can do is get more aggressive on the shorts if I'm so inclined, depending again on how far I think it's going to move. So what that means is this. If I have 30 of these, let's clear these ones out. If I have 30 of these, of the 20s that were grabbed for around 10 on average. And let's again say that we're going to sell in the 28. And let's say that I know that there's a handful of days left before strategically those need to be moved further out in time. And for those that don't know, when I say that kind of roll, it's really simple, right? We're closing a position, opening a new one. It would be rolling these long options. So with that, do I want to try to collect a little more money on the short call side of things based on what I think is going to happen in the market? So what that means is maybe I come all the way into the 95s. And let's say that I get these for $9. Well, effectively, if we recall the basics of option pricing, you can see that this $9 you collect on top of the 95 will literally show you where your break even is for the option at expiration. And the reason why this matters is because you can use it as a proxy for how far do I think the underlying is going to go, and therefore how much premium am I collecting, and do I think that the premium I'm going to collect accounts for the expected range for the underlying itself. So in this case, let's say we can see our break even is right around here at like 104. So with the break even at 104, do I think that the option itself or the underlying itself is likely to go super far above 104? Depending on my answer to that, that will determine if I want to sell something like this, the 95s, or do I want to go a little further out of the money? Because if I think that Palantir is likely to roll over a little bit and start to come back down, then I actually want to be way more aggressive with these calls. I can make way more money with them than just holding the underlying or holding the long options and just waiting to see what happens. So as always, it's a dance, but the dance is really based on those first two inputs. It's what do I think the underlying is going to do? And it's what is the strategy as it's put on? Where am I at in the phases of the strategy? And based on those, I'm going to choose to get either more or less aggressive, both with the short call deltas, but then also how many I will sell. Both of those influence that condition. So again, as always, you all know this by now. Simple questions really do not have simple answers in the trading world. And it's because there's so much nuance as to what's going on. But I hope that that's useful overall. If you have any follow-ups, obviously just let me know. H says, I'm trying to get out of the habit of stubbornness that is rewarded from staying in GME and I need to push harder on branching out. Well, not necessarily. There's nothing to say that you can't specialize in individual stock if it's working, right? Like if something is working, then that's okay. You can absolutely do what's working. But this goes back to having very clearly defined goals as a trader, what you're trying to accomplish. And then if whatever it is that you're doing, if it directly moves you closer to being able to accomplish those goals, then the one underlying might be completely fine. But if you're looking at the performance of that one underlying against what you're trying to do, and you're like, fuck, this doesn't really line up with what I want to happen, yeah, then you absolutely need to start doing something else for sure. Trading Options says, one more question, if you don't mind. When trading vertical spreads, which is the best time of day to get more premium? Depends on a million things. The very brief answer to that question is the beginning of the day is often going to have more volatility, and often towards the end of the day is likely going to have more volatility. It will depend on a million things. Time frame that you're trading, underlying that you're trading, what the current market conditions are, yada, yada, yada. And again, based on the broader strategy, I don't know what you're doing, but that question opens up a bunch of questions in my mind to the primary is, what are we doing that getting the most premium in a day matters that much? In my mind, we're probably optimizing for the wrong thing. Just a hunch, but I have no idea what you're doing, so it could be completely wrong. Elizabeth says, an idea for your series: after logging trades in your trade log for a period of time, what are all the aspects of data worth looking at, and what actions do you take once analyzed? This is actually a perfect, thank you so much for that, Elizabeth, because it's literally the perfect pivot. So we have a few minutes left, and I do want to make sure that we have some time. By the way, great questions, great conversation. Hopefully it's useful to you guys, but I really enjoy understanding the way that you're looking at the markets and the kind of problem sets that you guys are working on. Obviously, I just hope that the information at least is usable and guides you in a worthy direction. But back to crafting out the mini series. So the mini series in my mind right now is probably going to be, like I said, like 4 episodes or so. And this is what I'm thinking of. And as I'm explaining this to you, I would really love for you to think about where you're at in your options trading world and where you're trying to go with it. Because the premise behind the series, so this is Outlier Options Trading Foundations. The entire premise, the mission, the purpose of the series is to help traders, newer traders, develop an approach on how they intend to proceed as a trader. It's a very broad concept, approach. But the reason why the approach matters so much is because the way I'm thinking about it is like episode 1, this would be things like landscape, analysis, mindset. Mindset, again, I hate mindset, that kind of like term, just because it's so abused and really esoteric and it's stupid. But there's a specific angle that I intend to approach it from that I think obviously is not stupid. Otherwise, I wouldn't waste the time on it. I think when it comes to mindset, the overwhelming majority of traders approach trading with the exact wrong mindset that quite literally sets them up for pure failure. So my goal is to help people identify those kinds of mindsets that really are probably more prone to their failure than their success, to at least develop a healthy relationship. And then we're going to talk, in my mind, again, this isn't defined yet, but we would talk about the process of trading. And again, this isn't like going into the markets, who the market participants are and stuff like that. We've covered all of that stuff in prior beginner series. This is more so trying to integrate the iterative approach that is trading to options traders. Because again, as per usual, if I told you that over the course of your options trading career, you're going to have to iterate on something. That means you do something, you observe an outcome, you take the outcome details that you can, you build it back into the process, and then you observe the next outcome, and you do this over and over again. That's what trading is. With that, as I still talk to most traders, they still don't have literally the fundamental tools you need in order to implement an iterative process, like a plan, like a strategy outline, like a trade log. This is akin to being a truck driver, but your truck has no wheels. It's not going to work. It's literally not going to work. But as I think about the beginner options trading world, the overwhelming majority of new options traders do not appreciate and think about the iterative process that they are about to start. Using a jiu-jitsu example, this is the case for new white belts that come in that are really, they've seen stuff on TV. They think it's really sexy to get these awesome submissions, and they're really excited to start knocking out these submissions and just crushing people. Meanwhile, they can't get off their fucking back if somebody's inside control because they don't know how to implement angles and frames. They're so worried about this other thing that's so far down the line that literally doesn't matter because they can't do shit to get off their back to do anything else. The same thing in trading. Too many options traders are so focused on how much money they're going to make or what time of day, for example, to sell the credit spread, that we're not even appreciating these other facts that are integral to your long-term success far more than any of this other stuff. So that's the concept behind process. So episode 2, this is all about approach. And this is thinking about things like how to make money. This is thinking about things like how to build a portfolio. That kind of stuff. Then episode 3, in my mind, are things like implementation. So this is literally following the outlier strategy process and the outlier trade process from end to end. So again, what I'm asking you to keep in mind is I'm outlining these broad ideas. I'm coming up with this now. This isn't, again, thought out yet. I want to know, one, what your thoughts are on these broad topics. What specific questions and stuff do you have about these topics so that I can build it into the series? So we know here that there's stuff about analyzing logs, which is a great question. And that's perfect because that fits directly into this one, the outlier trade process. So that's a good example there. And then EP4, episode 4, this is evolution. The way I think about evolution here, it's going back to this point over here. It's ingesting information and its optimization. And exploration of new ideas, new ways to do things, different ways to maybe implement existing ideas. But this is the series at a broad level that I'm thinking of. If you have questions, if this makes sense, if it doesn't make sense, if there are things that you think would make sense to add to this, I would literally love to hear it. And while you're doing that, there is a small critter scratching at the door post dinner, ready to come back in. So I have to go, obviously, got to go grab him. So give me 1 sec and I'll zoom you guys out so that you can see him because he just got a haircut. The dude, look at him with his fresh cut. See him? He got all trimmed up. He's looking dapper as can be. Look at him go. You have a good dinner? Yeah. Right now he's literally standing on his back legs like a little bear. There he is. All right. Back to this. Lauren says Thor's pimping. Yeah, he is. He's got his tuxedo on as per usual. He's keeping things dapper AF. Really what we would expect from him. Is actually hilarious because he was so floofy. Oh yeah, I didn't even show you guys any. You guys want to see some drone photos? You give me a sec. I can hide all this. Move this. Good. I'll show you some drone photos from Ireland. Pictures. Drone. All right. Oh no, that was good. So we just got back from a couple weeks cruising around Ireland. So I'll click through some of these while we're hanging out. You can still throw in questions and stuff. I'm just gonna kind of click on these in the background. Is there a way to like automate this so it doesn't automatically? That would be nice. Is this it? No, that's okay. I'll just click on them. Mateo says, do you think that selling credit spreads based on moving averages and collecting premium, trading 0 DTE is a good day trade strategy in SPX? That's a great question. I wouldn't be that excited about that strategy personally, but that doesn't mean it's not a viable strategy. It could be, and it's something that could work, but there's a lot of elements of that I would consider to be quite suboptimal, even down to the directional element. I think that it's likely going to be really difficult to do that successfully. So this was kind of cool. This was like the roads that were there. As you can see, it's literally like a straight single lane that goes on the side of this freaking mountain. Really funny because you have to, the driving is very different. The fun part is obviously they drive on the other side of the road and in the other side of the car, which is actually quite funny to me. I really don't have any issues making the adjustment, but it is funny to see like when other people are like, yo, that's actually, it's completely different. But this was, we were staying at, actually, I'll show you. We're staying at this place. We were staying at this big manor. We had a suite that was like right in here somewhere, that like overlooked their gardens and stuff. But this manor was literally right by this giant castle. One of the cool things I found about Ireland is they have castles everywhere, dog. It's such a different thing compared to the US because they have stuff that's built in literally the year 1000. And here in the US, this shit wasn't around until the 1770s. So it's like just such a baby, world compared to Europe and a lot of these other places. You see that there's just sheep everywhere. Mateo says, do you think, oh, I already answered that. Sorry. Lauren says, did you have a good time on vacation? The birds were cool. Oh, absolutely had a blast. We love traveling. Both Mel and I, we literally just love seeing other places. It's so fun. Yeah, we had an absolutely incredible time. So yeah, these are just some other shots of the castle. I forgot how old this one was, to be honest. I'd have to look it up somewhere, but suffice it to say, like most of these other places, the shit was old. What other interesting photos do I have? This wasn't really that interesting. This was just like a lake that we were at, but it was kind of captivating in a way, I suppose. Right now we're standing right in here. This place was cool. So this place, here's the interesting thing I found about this place. The interesting thing in my mind about this place is why Why is this spot so fucking green compared to everywhere else? There's an aerial photo that I'll show you. This one. Why is this one spot so green compared to the rest of the stuff around it? It's like this little stone rock formation literally from forever ago, like the rest of this stuff, which is pretty interesting. I don't really have an answer to that, but it interests me. This is another spot that we stayed. They have a lot of these like really, really old manors that you can stay in. So this was another one. We were in a suite on this one that was like over here. They all have like these really expansive grounds that they're plopped on, which is pretty neat. Pascal says, do we have access to those slides? You do not. That is just a random reference deck that I've been building for myself for like 2 years now, really for you guys. It's all stuff that I reference for you guys, but it's nothing that I share externally. Mateo says, based on historical data, I noticed that the market very rarely moves time to the expected move for the day. Based on that, I enter my trade close to the top levels of expected move up or down. Yeah, I don't think it's a bad approach. I think you're looking at it the right way. I think the problem is it's the market also knows that, right? Anything that you think you know like that, the market knows. So unless there's a good reason for the persistence of some sort of idea, then it's unlikely that there's significant edge within that idea. So from your idea of using moving averages and trying to trade intraday directionally with short premium, you're kind of starting to cross over in short-term direction, which is really dominated by algorithms. It's very, very difficult to outperform an algorithm in that space. So that's why like my broader expectation there is that it would be pretty challenging. That doesn't mean not profitable, doesn't mean that couldn't work, but I think it would be like, it's definitely different than how I trade those timeframes personally, that's for sure. But yeah, I think it's absolutely worth exploring. And if it's something that you're finding even just general interest in, meaning you enjoy it, or if it's something that you think is generally promising, there literally is absolutely nothing wrong with testing the waters and seeing how it goes. Like, I think that's completely fine, especially because you're doing it via credit spreads. The thing with those credit spreads is you're probably not going to make a bunch of money. You're not going to lose a bunch of money. That's one of the benefits of trading spreads like that, is they naturally have a bit of a built-in buffer to effectively keep you from hurting yourself unnecessarily. So Mateo says, also theta is in my favor. I tend to simply close a trade at 50% and possibly open another trade. And that's one of the problems you're going to have with that, right? Is the instinct to close at 50%. You're trading two legs. That's going to be expensive in terms of the round trips and in terms of slippage. The other thing there is theta is slightly in your favor. It's not significantly in your favor because, again, remember with that credit spread, you're buying a leg. So yes, the short option in that context is going to be the more dominant leg, and that's why it absolutely will benefit from theta for sure. But as that one option is benefiting from theta, the other option is getting crushed by that very same theta. So you really minimize the total theta benefit in that context. What other cool? Oh, this one was cool. This was that's that spot we were staying in is right here. You can see like there's like this really long winding road that goes through a bunch of flowers, but the colors in this town I thought were really, really neat. Oh, this is crazy. So this was our first day. Like the next series of photos was like the full day that we had. And this is what it was. We were joking that this looks like the freaking Caribbean to me. And I've spent a lot of time diving in the Caribbean. I had no idea Ireland had coastlines like this, but it was literally so sunny that we're like, yo, we literally need to get freaking sunscreen. Otherwise we are going to burn. That's how sunny it was. And everything that you get told about Ireland is obviously it's like super rainy and stuff like that, which we just got really, really lucky with the weather. But that's me sitting, flying the drone. That's Mel just kind of checking out the water. But yeah, this is literally the water, which I just had no idea that this place had even anything that looked like this. It was absolutely wild. Not expected in the least. Then this was the same day we were on like some sort of overlook, right, of like this little bay. Michael says Pfizer, CNBC announced drug tariff with all the drug companies selling off on news, but America should be safe. Okay, you're just providing some information. Thanks for sharing that. H says underground springs, natural well. Maybe that's interesting. Yeah, the weirdest part about that green circle is like was like specifically in that spot, and the overall span of that space was just not that big. I just didn't understand it. I found it, and it's not like it's irrigated because that's out in the middle of nowhere. So yeah, I just thought that whole thing was pretty novel. Vivek, good evening, sir. Good evening to you. Is there a way one can become profitable in option buying by holding or scalping the only way? Could you clarify your question a little bit? I just want to make sure I'm understanding so I can answer you correctly. When you say by holding or scalping, or is scalping the only way? My bad. Okay. Is there a way one can become profitable in option buying by holding, or is scalping the only way? Scalping is in no way the only way. Scalping is actually a really poor way to try to make any sort of serious money in options trading. So yeah, you can absolutely hold. You just can't hold forever, right? Because they have expirations. This I thought was really cool because this one, again, reminded me of the Caribbean, like these freaking boats and these docks. I couldn't believe the water. I just had no idea that this place had water like this. This was from some bluffs. So for scale, you can see that those little dots over there are people. These are people. And these are people. I like the tip. So to give you some idea of scale, these cliffs were absolutely massive. They were beautiful. Really, really, really pretty. Then this was us cruising out to some lighthouse. So that's the car. That's the lighthouse we went to. And then we were literally just hanging out here to fly the drone and take a look at the water. And again, take a look at the water. It's crazy. So in Mel, she's right here. And then I'm right here. You can always find people in case you don't know, via aerial photography is if you look at the shadows. So you can see where the shadows are cast. That's how you can kind of identify where people are at. But anyways, cool spot. Ehaj says, do you show your previous trading from idea to execution on Patreon? Yeah. So on Patreon, what I do for that is in the streams, I'll typically talk about recent trades and why I'm doing them. It's not my whole book at all, and it's not a trade alert service, so I implement latency. So I don't like cherry pick like good idea, bad idea, but some of the things I will tell you guys as I do it because it doesn't really matter. So like if I'm putting on an earnings play or whatever, that doesn't really matter that much. But for a lot of the other stuff, there's latency because I am vehemently against being even remotely close to what could be considered a trade alert service. Those are, I think, straight garbage. But the broad purpose of the pro side of the community is because it's smaller, I can go through a little bit more of my activity. So on the streams, we spend actually quite a bit of time looking at the markets together. We spend time analyzing, trying to come up with ideas, then scanning, then building watch lists to then trade, and then modeling some trades, that kind of stuff. So yeah, that's actually kind of the primary purpose of that side of the community. All right, let's take a look at, okay. So this part this part was one of the cooler spots that we were at. So we didn't know this, but there's a place. Let me see if I can find it. Here. So apparently in Star Wars, there's a series of spots, and I guess in one of them, Luke Skywalker, I think, dies on like Star Wars Rock or some shit. This thing right here. So this spot is what I'm about to show you guys. And funny enough, we ended up getting there right around sunset. That wasn't planned. I enjoy Star Wars as like a casual fan. I don't know shit about it. But when we were going up to it, it's literally called like Star Wars Rock. But this was an absolutely gorgeous, gorgeous spot. And you'll see where we are in a second. But this spot was absolutely captivating here. So you can see Mel and I here. And yeah, this absolutely giant bluff hanging out with the sunset. There's a couple, this photo I like. I don't know why. I just think this rock was so cool. Like the lighting difference and stuff like that. And then I want to show you one other one. This one. So this was a panoramic, obviously, of the Star Wars rock thing. So the Star Wars rock is like right in here. Pretty neat spot. That one was like some glacial cutout, probably not as interesting to you guys. This one's pretty cool. So we stayed at this castle. We had a suite in the castle. We were actually trying to figure out the orientation as I look at this thing. Okay, so the front's around the side over here. So we had a spot that's literally right behind the tree, unfortunately. We had a spot that's like right behind this tree. It was like its own wing. It was absolutely insane. I'd never seen anything like that in my life. What a absolutely novel. Yeah, here you go. Now you can see it. So this dark area is like its own wing. So we were staying in that spot. So we kind of had like an entire view of like the lake and stuff, which is really cool. Vivek, did that make sense to you, by the way, about the idea of like being like, you definitely can make money by holding options. But it depends far more on the approach, for sure. Tommy says pro, also go through scans, good stuff. Yeah, definitely. A big part of what I try to do in there is really like tie together the entire practical application of trading. So we have a lot of like different support programs too, like the trading program where I put you guys into groups and build a syllabus for you to meet with each other on a weekly basis. I started offering now office hours so that there's time a couple times a week even to just have like a direct back and forth conversation about whatever. But yeah, it's really designed to take like the theoretical core components of what I show you guys and to show like the practical application component of it. So this is an interesting thing that I learned. I took Mel, I found this random ass thing where you can go for, I'm not kidding, you can go for a walk with alpacas. And as we were going for the walk, the dude that we were walking with was explaining this thing. It's called a fairy ring. And it's like there's a lot of lore in Ireland around fairies and leprechauns. But that's the background of that, kind of random. Okay, one of the last things I want to show you guys. This was one of the coolest spots that I think we found. This. So right now you can see Mel and I, we are right there. So again, this is to give you some context of scale and scope. So that's us this was one of the neatest spots that we found. This like little rock thing is completely detached, so it has its entire own like water flow thing going through here. Mateo says, thinking about taking an online certificate on derivatives investing in either NYU or Wharton. They're about 2 months long, wondering if they're worth the money. I think so. I don't know anything about them, but I think the education itself is worth it. Now, you can do those kinds of things for free, right? Like you can do OpenCourseWare from MIT and take one of their derivatives courses or something like that. But one of the things to note is the vast majority of institutional places that you're going to take those kind of courses, it's not for retail traders. They're going to be talking about derivatives investing from the lens of like banking. It's not going to be, or client management. It's not going to be derivatives investing from a retail trader's lens. That doesn't mean it's not useful, but it's not like this direct application thing. Because I did a series on YouTube not that long ago, well, actually probably a while ago now, where we did OpenCourseWare options trading course. And it was exactly that. It was much more about like corporate and institutional implementation of derivatives versus retail trading for sure. So worth the money is going to be entirely contextual on, you know, what that means to you and what you think is worth the money. But yeah, this was a place called the Candlestick. It's just like a rock out in the middle of the ocean. This one was cool because we were literally fighting. We were racing against time. So you can see right now we're way over here. This was that rock I was just showing you, right? So this rock here is this rock that I'm kind of doing a big circle around, but you can see how dark the sky is on this side. So literally rain was very fast cruising in. It's like literally consumed this entire side. You can see Melani here, little tiny specks on the coast. This spot was also crazy. There's Melani. Just, we went for like a post-dinner walk like we typically do, and it was really cool. These were like the roads, the colors here I thought were pretty neat. More of the absolutely insane water. Just nuts. This one I just thought that the gaps in the rocks looked super cool. Bunch of these old ruins. Like there's these old churches and old ruins literally absolutely everywhere. Reese says, how's your mentor doing? If you don't mind me asking, don't mind at all. So for those that don't know, this was a couple weeks ago. The guy that got me even basically understanding of what investing was in terms of like compounding. I had been reading about like my grandpa, he had newspapers. So I was always interested in charts. I thought they looked cool, but I had no idea what I was looking at, no idea what investing was, no idea what compounding was. But that dude is the guy that actually taught me what investing was. This guy right here. So this is me back in high school. And I keep in general touch with him. We don't text like every day, but we text, you know, definitely every other week and, you know, have probably a little more frequent than that. So I sent him a text on like a Tuesday and I didn't get a response back, which is rare. Normally he'll respond at least within a reasonable time frame. Then I sent him another text on Thursday and he didn't respond. So then on Friday, I went to look to understand like the timeline between the texts because I didn't know. And I saw that the text I sent on Thursday actually was green. He has an iPhone. So the fact that it was green told me that the phone was dead. The fact that he didn't respond and the fact that the phone was dead is very wrong. So I ended up calling the police to schedule a welfare check because he's in New York, I'm in California. And they found him on the floor. And he had been on the floor for like 3 days. He was like really close to dying. He was completely dehydrated. He was hypothermic. So he's in his 70s. He's not that old, but he has cancer. So they're working on, he was on like a trial drug that messed with his blood pressure a lot and stuff. So, anyways, they end up bringing him to the hospital. They start running a bunch of tests. The dude survives fucking magically. And we think that he had a TIA, which is a small stroke. When he was upstairs in his house, he went downstairs, and then we think he had like a full-on stroke after that. So he couldn't talk much. He was still there, like he could understand what was going on around him, but he couldn't talk much. He obviously couldn't walk or anything like that. And he just was brought back home like 2 days ago. He can walk around a little bit by himself now. He's getting stronger. He's not like a fall risk anymore. He can talk. So he's recovering insanely quickly. So yeah, no, I don't mind you asking at all. I appreciate the thought. He's doing incredible. It's absolutely insane to think about the fact that this dude literally almost died just on the floor. And it was like a series of small little clues that led to me thinking, something was wrong and deciding to check it out. This was another really cool castle that we got to explore. This one we got to like actually go in and like go upstairs and stuff, which was really fun. Then this place was really neat too. There was like this city that has like this little whatever government building was, but then there's a castle right across from it, which I'll show you here. This whole thing is an old castle that they literally just built a city around, which is really, really neat. You can see like this is towards the end of the trip. There's a bunch of weather rolling in. This I thought was interesting just from all these different house colors. They have a bunch of just giant rolling open fields. This was our last night. We literally stayed in a penthouse. So this entire top floor was ours, and it literally had like a small putting green, which is just so comical. And then right across from us, obviously, was just like this really cool bay with all this interesting stuff in it. This I just thought was captivating because of all the different colors, like the little squiggly lines and shit, the clouds. I thought that one was pretty interesting. And then there's some evening photos of the sunset. This one I liked because there's like the glow of the sunset on the church. The purple in the sky was crazy. This was really neat. This fucking boat that was just sandbarred, but then obviously getting like the reflection of the sunlight and all these little spots here was really, really pretty. And then this is the bay. This is the hotel that we're staying at. So literally it was the top floor. This entire top floor was ours, which was nuts. It was super, super cool. So obnoxious in terms of like the size of the place. We like spots that are, that have really cool views. That's what I look for. And the view from that spot was really pretty. And then there's this, like as the sun was setting, I took a panoramic. I actually like this panoramic a lot. So yeah, those are at least some of the drone photos. I have a bunch of drone videos. I make like a little video for us just to kind of remember the trip and stuff. It's like super fun. But yeah, that's what it looked like. It was like a really, really solid time. We enjoyed it a lot. Very, very fun to explore. We literally drove like 1,400 kilometers. Whenever we do these trips, we drive a ton so that we can see a lot. We literally stay in each hotel one night and then it's on to the next. And it's just this giant loop that we did. That was super fun. GC says, what are you, a professional photographer too? These pics are amazing. I appreciate it. I am a complete amateur, but I do find like flying the drone is really fun because it gives a completely different perspective, which is just really, really interesting. It allows you to experience places in a way that you otherwise would never be able to experience. This is especially a place like Ireland. The drone obviously was cool to capture it, but places like Norway, Iceland, Alaska, the drone there is like clutch because it literally lets you see stuff that you functionally could not get to. otherwise. That wasn't really so much the case in Ireland. Like most of the spots, reasonably, you can at least see part of. But definitely not the case in those other places. Those other places, like, you literally can't get to some of them. So, sweet. Awesome. Well, it was absolutely stellar catching up with everybody. I'm going to work on refining down the series for the next few weeks at least. So if you have any input based on what I was showing you before, even if you don't have something right now, but it's something that you kind of think about a little bit later, I absolutely would love to know. Yeah, my goal is to make this usable, but I want to really focus on the foundational element of this. The main reason for that is just because I think having the right mindset and the right general approach to what you're doing is absolutely so important, because there's nothing else that will matter as a trader if you don't have this stuff dialed in. So that's the idea. All right, gang, we are officially back. We are back to the full production schedule. So tomorrow we will have a GME stream, get caught back up there, share some updates on the covered strangle. I made a series of adjustments in that for GameStop. Sunday will be trading prep for the pro members. And then next week we are back on full cadence. So great to be back. Great to see everybody. I love seeing familiar names. There's a lot of people here that have literally been around for, years. So there's people here that I actually feel like I know to a degree, which is kind of cool. The last thing I will mention is the channel is closing in on 30K, which is so awesome. But I promised you guys a specific stream for when we hit 30,000. So I will grab the link to that, because I'm also going to do a giveaway for when we do hit it. So there will be a specific stream, and then also going to offer to connect with somebody and essentially have a one-on-one with them, which I offer limited availability for that for like a really small number of people. But every once in a while, I like to just connect with somebody random and, see what we can do. So we are on our way, almost there. As always, if you need anything, just hit your boy up. Be an outlier. See you later.